All right, folks, Brandon Chapman with you. It's a Theo Night video for November 29th, 2021. And we're going to talk about Omicron failed to deliver the Bears today. But what about tomorrow? Man, but it's not time to think about tomorrow. We got to think about today. Because why? It's Cyber Monday. Of course, we have our Black Friday special today going on at TheoTrade. It's an annual for $7.99. That's a 20% discount for TotalTheo, which includes what? All of our classes and content, including a Q&A. And Don's got one coming up tomorrow for Ultima that's going to be interesting, walking through question and answer from all of our members, our TotalTheo members. So feel free to join us tomorrow. If you sign up today, feel free to take advantage of that offer. Anyway, let's get rolling here. So let's look at the broader market. This is the ES futures. Friday did not bode well. It was a big down day. And of course, the fears of the Omicron, the variant of COVID that everyone's talking about. Is it more deadly or is it less deadly? Is it more infectious? Who knows, right? We're kind of playing it by ear at the moment. Of course, the market seemed to take some of the information from some of the doctors that are treating patients there, that it's that's more mild than the Delta variant of COVID, for example. Markets move higher today, up 1% on the session. Of course, we're led by technology. Technology shares, well, who's at the center of technology? Of course, we've got Apple being one of the biggest players on that one. We've got Microsoft as well, up about 2% today. So the big names did well today, but generally speaking, everything was in the green on a sector level. Even industrials, after an early kind of spike up, faded, was lower on the session. We rallied off our lows to finish higher, followed by staples, which, you think maybe we're getting a little more defensive right now, and we're flirting with resistance up here on XLP. This is the staples ETF. Maybe we make a shot at it, this little spinning top we're seeing today. But this was not the top performer. It was cyclicals, but more about technology today more than anything. Also, utilities were up there in the mix at 1.48%. Of course, if we look at, for example, Treasury yields, Friday it took a major decline as bond prices surged. We paired some of those gains on Friday today, but basically testing the high of the gap day on Friday. So generally speaking, falling Treasury yields are generally good for utilities companies. We've been waiting for utilities to get started for the last couple of weeks, really since November 15th. Maybe this is kind of the spur of the market kind of inches higher here and yields remain low. Maybe this is the spur that causes utility prices to rise maybe towards 70. Some of the ones I kind of throw in this mix are like Southern, for example, or VST is one that generally trades a little more discount, does not follow this sector quite as much. But anyway, all right, let's take a look at some of the futures here. We look at /GC. Gold did not. It perked up on Friday, fell back as the dollar strengthened, was down slightly today, but setting up well potentially for a seasonal run. Now, over the last number of years, in December and January, gold has performed relatively well. Did a blog post on this last week on it as well. Sometimes it's a little late getting started, but the sell-off here may bode well. So if some of the fears kind of subside a little bit, it may create an opportunity for the dollar to decline and for gold to rise, potentially even outperforming the S&P if we see a strong enough run, particularly towards the end of December into January. It usually fizzles seasonally as you start approaching the end of January and into February. Oil prices today. Oil prices finished up slightly. We did kind of spike up here, tested the midpoint of the big candle from Friday and faded from that price point. As you look at oil futures, you'll notice something very important here. Yes, every contract is in backwardation, but the slope is getting flatter and flatter and flatter, which means what? It's an indication that some of the shortages that may be anticipated going forward may not necessarily materialize. And normally what you see with oil is kind of an S slope here, right? And we're hopefully we'll start to see this flip and invert and go back to more of a normal structure. That is something to watch for. But the flattening definitely shows that some of the bullishness is being tempered in oil specifically, and then may spill over to energy. Energy was still up 0.5% today, but you notice how it failed or faded from the high as oil itself faded. So again, energy may not necessarily be the place to look for if the market does rise. It might be more some of the bigger names that are out there if you're bullish. Of course, your Amazons, your Apples, your Microsofts, etc. Of course, if we're to look at Amazon here, Amazon was up about 1.63% today. Facebook was up about 1.4%. And of course, Facebook, Meta Platforms is changing their symbol. I think it's MVRS. Anyway, let's take a look at specifically small caps. I mean, small caps were really taken advantage of on Friday and really fell back dramatically. Today, as we saw it gap and then fade, it did finish lower. Now, generally speaking, small caps, earnings have not been a great story for many of the small caps, of course, dominated by stocks like AMC, for example, and others, GME. But point being is that as we look at IWM, today there was some big trades. We're talking about hedging, and we'll kind of take a look at that. And this is one on the unusual option activity side of things. This is for a 10 December expiration. And if you look in here, you'll see a 215, 17,000 contracts traded. You look down here at the 195, 17,000 contracts traded against 1,000 open interest and also against 825. What was this? This was if you come down here, time and sales, this was a long put vertical, right? It's a bearish trade. You notice here, some other stuff thrown in the mix here, but 215, we're not really sorting it by time. I got broken up there. Forgot about looking at the time of sales here. But the point being is that's 10 December as well. I should have dug through it a little bit earlier just so we could find it here. But you'll see right here. Here's a portion of that trade, 215, 195. But the point here is that what? I mean, this is indicating potential downside in IWM to 195. And again, it doesn't mean that the market's going to get there, but it is very likely a hedge. Now, one of our co-founders of TheoTrade and our prime instructor here at TheoTrade as well, Don Kaufman, went over a couple of hedging strategies this morning on the Qs and in and using the SPY. Now, we have a number of hedges that we employ at TheoTrade, both when the VIX is low and when the VIX is high. And it's one of those things is that have we sounded the all clear on the market? Maybe not. So the point is you got to be prepared that if the market does continue to slide. So what are some things that you could employ right now that help you hedge a potential continuation of this Omicron experience from a policy standpoint? Do we start to shut things down, etc.? Are the fears that are kind of assuaged today, do they start to come back and we start to see more downside? I'm not sure anyone knows the answer to that, right? But uncertainty can be hedged away or reduced. How do we do that? We can do that through the options market. And again, we have a number of different option strategies for both low volatility and high volatility. It's important to have these in place. There's ones that are low cost and there's those that are a little higher cost. And right now, you're probably going to have to come out of pocket a little bit to be able to reduce your downside exposure. So QQQ, of course, we're talking about some of the biggest market cap stocks out there influencing the QQQs disproportionately. So what can you do here? You can look to the options market as a hedge for your downside risk. So on this, we're going to look at the 23 December. So we're going out about 24, 25 days here. And again, this is one that Don walked through this morning for our TheoTrade clients. And we look at here, 383, 373. So we're looking a little bit out of the money here. We could look at it in Delta, et cetera. But if you look at 383, you notice right here, it costs about $4. But look at the implied volatility. It's 25.8%. We could do a 10-point spread, buying the 383, selling the 373. Notice that the 373 has higher implied volatility. This means what? The cost of this hedge is reduced, and it has almost $700 of potential protection reasonably if the market were to drop suddenly in the next few weeks. You're not going to maximize that around a little over $8, but it can provide significant upside potential. It might cost you about $200 to put on. Anyway, so one to consider as well. Now, another one, this is those that maybe you have long stock, for example. Maybe you're not just selling puts out there. We have our Ultima strategy that talks about selling puts, selling premium way out of the money. You may want to hedge that movement in the stock towards your strike. That Qs might get you there. But what if you have long stock or maybe your delta is really big? You want to take a bigger chunk out of it. You could look at, for example, in this case, the 10 December expiration, going shorter amounts of time, we're going to look at buying options. Now, the option we're buying or looking at this morning was deeper in the money. We're talking like an 85 delta. So again, there's times where you just got to, get out there and use a blunt instrument. That's what this is for the most part. In this case right now, it'd be the 444. Earlier today, obviously, it was a slightly higher strike price at 473. But the point here is that what? We're looking at hedging downside risk in the near term, right? Just by buying some puts against the market, high delta stuff here. So again, just gives you some ideas of ways of kind of managing risk. Of course, this is something that our members know instinctively. We have multiple classes that are for 3 hours walking through each of these hedges. And these are ones you can kind of step in right now immediately, take away some of that downside if Omicron does end up being more impactful in the market than some are expecting. All right, let's kind of finish this up by talking about what? Let's start talking about a few stocks that are in the news. Because again, where's the market going from here? It's anyone's guess. It's a spinning top. So much. The news cycle could dramatically affect this depending on policy. It does look like we may have a chance of rolling back to our prior highs. And of course, we're looking at the performance here. All right. Let's focus on a couple of stocks here as we wrap things up. We saw the unusual option activity in IWM. Another stock out here is Hertz, HTZ. This is one that's kind of interesting. It's been kind of grinding along, but over the last several days, there's been a number of bullish trades in Hertz. And again, I've talked about it in my daily sessions, etc. At TheoTrade. But today, again, we're seeing it materialize again. It's a December expiration. I'm going to bring this up here for open interest here. It's the 2750. So you notice, right here, for example, 7,100 contracts traded against 9 open interests. So what's happening? We're seeing that call buyers are coming in. The 2750 is a little bit out of the money, about almost 10%, 8% out of the money. You look at time and sales in here, you can see bought in one print for 5,000 shares. 17D is 2750. So again, there's some buying going on in here at the 2750 strike. That's bullish expectation for Hertz. 2750 is not far out of the money, but again, combined, we're seeing multiple days here. Maybe we do have a shot of maybe running up, retesting our prior high at 35. It's a potential $10 move in Hertz in the near term if we see the squeeze here. Another stock as well that's kind of a bottom feeder. This is SB. SB finished up about 7.3%. The company is in dry bulk marine transport, right? So it's a transportation company. Of course, everyone's heard about kind of all the transportation issues, the carrier, the ships off the coast with tons of containers, etc. Now, safe bulkers today, it's pulled back a fair bit of late. We're kind of retesting some old resistance, now support from July. And today, what we saw today was, look at the statistics, about 11 times the average in terms of call volume. This stock doesn't usually trade a lot. Traded about 10,000 contracts, 58% at the ask. That means people are buying calls today. And as you look at the option time and sales, it wasn't necessarily in one large print, but it did happen relatively quickly as you look throughout the course of the day. And of course, we look in here, 4,600 contracts traded on the 17 December, $5 strike price in SB. So again, what does that give you? It gives you a potential upside target of $5 within the next 18 days rather. That gets us back to our prior high here. Yeah, we got some intermittent resistance at 450. Again, maybe you don't play that $5 strike. Maybe you look at something closer, like for example, even just buying the stock here as an example, or an in the money call. But again, this gives you an idea of a stock that may be poised to move, that had a nice breakout today and had good volume, coupled with some significant option activity. Well, that's all I got for you today, folks. We'll see you back next week for the video, at least for me. Of course, we got others that are doing it throughout the course of the week. Thank you. You have a great Cyber Monday, and don't forget to go to TheoTrade.com and take a look at a Cyber Monday deal that expires 12 a.m. Pacific time tonight. So you got a little bit of time left to get that $7.99 offer. Thank you.